Hey everybody, it's Patrick Moore with Ironclad Wealth Management here, and today I've got a fun one. And the reason I say it's a fun one is it's something that you can probably qualify for with little to no changes in your business. And so today I want to talk to you about how Georgia small business owners specifically can save money on their health insurance. And I think that typically when people hear that, they've probably talked to their health insurance broker, and the only real way to save money on your health insurance is by cutting benefits. And today, that is not what we're talking about. So, we're talking about a way that you can save money on your health insurance without cutting your benefits. So, before we get into this is not individual tax advice. This is general information. I hope it applies. If you think it does, let me know. Hopefully, I can help or bring this to your own accountant. But if you think this one works, definitely see and put it in context for your business itself. So today we're going to talk about what the method to save that money is, who qualifies, how it works. We're going to show a case study, and then I'm going to actually show you what you need to do to claim this benefit. So I think everybody knows why this matters. You've probably gotten a bill. You probably got a bill that increased by double digits, and you probably weren't very happy about it. So I actually pulled a chart here this is from the Kaiser Family Foundation. It shows family health insurance premiums from 1999 to 2024. And from 1999 to 2024, which was a low inflation environment, the average health insurance premium for a family went from $5,791 to $25,572, which is a 341% increase. Like I said, in a fairly low inflation environment. So just an absolutely insane increase over the last 25 years. And I know that everybody watching this video has felt that pain. So it's not an answer to everything. I can't say that it is, but it is something where I can tell you, instead of having to talk about how your health insurance costs have gone up, we can talk to you about how the Georgia Qualified Health Insurance Expense Credit can bring those costs down a little bit. So, what is it other than being a mouthful? I'm just going to call it the tax credit for the rest of this video. It is a Georgia income tax credit of up to $250 per employee per year. Now, I mentioned that there's some very limited, like, kind of qualification criteria on here, so it's actually not too hard to get, but it is specifically designed for small business owners in Georgia, and it is already approved and written into the code through 2029. So, with that being said, who qualifies? There's really three criteria here, okay? First, it does have to be a business with less than 50 employees. So, when I said it was for small businesses, I did mean it. The second is that the employees who are given the credits must be Georgia residents, meaning if you've got 50 employees, 12 of them are in Alabama, those 12 won't qualify. And then finally, those employees must have worked for 12 months continuously for you. So if they've worked for you for 6 months, 9 months, or 11 months, unfortunately, this is not a pro rata credit where you'd get 11 months worth of credit. It's an all or nothing credit. So how does it work outside of who qualifies? First, your employees must have a high deductible health plan. Now, what that is code section 223 of the IRC. And that is something where if you're offering a plan that is HSA eligible, it's the same type of insurance plan. So it's a high deductible health plan. Those are the plans that qualify. It must be offered to all of the employees as part of a Section 125 cafeteria plan. And because it is the qualified health insurance expense tax credit, you must actually contribute to your employees' coverage to be eligible for the credit. You don't just get it for having the plan and then the employee pays for all of it. You have to get the $250 credit. You have to be putting at least $250 a year towards each employee's health coverage, which most employers are, but obviously not everyone does. Now, once you get the credit, if you can't, the credit is actually higher than your Georgia state income for the year. So if your tax liability is $10,000 and you get a $12,000 credit, you would get a $10,000 credit, and that remaining $2,000 would carry forward to next year, and it would carry forward for up to 3 years. Now, finally, it doesn't carry back. So if you use up all your credit this year and you had a balance due last year, you can't actually take credit for it last year. It's only this year, and then the 3-year carry forward. So let's do a quick case study together. I always like to put these in action and kind of show you what it looks like. So the case study today, I'm just going to call it the Dermatology Group of Atlanta. They got 48 employees. They contribute 80% of the health insurance premiums for every employee. They offer both a PPO and a high deductible health plan, and their Georgia state tax liability is $50,000. Now, quick overview. So let's start on the left. So if we start on the left, you've got a breakdown of employees. 11 employees are on the PPO plan. 37 employees are on the high deductible health plan. The monthly cost to the firm is $800 a month for the PPO plan per employee, and the high deductible health plan is $500 per employee. Now, the big thing to note, and I've annualized the costs there under the employer cost, that would be their premiums on the plan, is look, those employees who use the PPO plan do not qualify for this credit. If you look on that last column there for the high deductible health plan, 37 employees using, let's say they've all been there for 12 months, so we're not doing anything complicated here on my example because I wanted to keep it easy on myself. That credit would generate $9,250 that they otherwise would not have gotten. So remember, this case study, have they changed anything? They haven't. They were already offering these health plans. They just didn't know about this credit. Let's say you just offer a PPO plan. You could begin to offer a high deductible health plan, and for any employees, because it's going to be less expensive, they would essentially become eligible for that credit. Now, if we look at this from the premium perspective, right, you've saved $9,250, but from the state of Georgia perspective, you owed $50,000 in taxes. Now you owe $40,750 in taxes after the credit is due. That's an 18.5% tax reduction or a 4.17% reduction in health premiums if you look at it that way. Obviously, it doesn't add together. It's an either-or situation, however you want to look at it. But like I said, every other time you've had a conversation about health insurance, the costs have been going up. In this example, the costs come down. So the question then becomes, how do I qualify for this, Patrick? And luckily, I've got good news for you, because if you've done other tax credit work, you probably were like, I'm not even sure this was worth the money. It was nice at the end of the project, but this kind of sucked. The Georgia Qualified Health Insurance Expense Credit, once again a mouthful, only really has a couple of steps you need to do. First, you should talk to your tax professional, determine if you qualify. You probably have to gather some health insurance information, make sure it really qualifies as a high deductible health plan. But then all you have to do is complete Form ITQHIE, which if you Google that, you can find it on the Georgia Department of Revenue website. And then all you have to do is fill out the form, file it with your tax return. The interesting part of this is that you don't actually have to provide any documentation related to your expenses. Now, you're going to want to hold on to it in case you ever get audited so you can prove it. And the reality is your business return is going to say right there on the line item, hey, we spent this much money on health insurance premiums for our employees. So it's going to be very easy for the state government to check, but it's not hard to qualify for. So really, if I had to summarize all this, my favorite strategies, my favorite credits, although there are some really good ones that take some work, are the ones that don't require you to do anything special. And this is one of those. There's nothing you have to do. You can get it for health insurance you're already offering. And if you can't qualify for it, all you have to do is do some small tweaks to your health insurance coverage. I'll begin offering a high deductible health plan. Maybe you get creative. You're like the Dermatology Group of Georgia, it was Atlanta, and most of your employees are on the PPO plan. Maybe you offer the high deductible plan and kind of boost that employer contribution by a little bit because you know you're going to get some of that back in tax credit. You can look at this and build your own plan that takes the most advantage from this credit. So if you like assistance with this one, and really I kind of view this as a cog in a full plan, right? The full plan is always more beneficial. Or if you like to create that full tax financial plan to kind of help reach your goals faster, reach out to us at ironcladwm.com. We got to schedule a 15-minute free intro call where we can talk about this, or just subscribe, wait for the next strategy, right? Because we'll have something else coming down the pipeline soon. So hope y'all enjoyed this and have a great day.